Iran, the bully of the Middle East, must now make peace. If they do not, future attacks will be far greater and a lot easier.
Fears of a wider war in the Middle East after the U.S. military strike on Iran. This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi Stroud-Watts in Sydney. The world now awaiting a response from Tehran after U.S. warplanes used bunker-busting bombs to strike the Iranian regime's key nuclear sites. We're already seeing that oil price jump as trade begins here in Asia. Gold, the dollar higher, U.S. stock futures declining as investors rush to safety. The Strait of Hormuz is now in focus, with Iran's parliament calling for a blockade of the waterway that's crucial to global oil trade. The Trump administration calling that a suicidal move.
The first people that should be angry about it are the Chinese government, because they take a lot of their oil comes through there. So they should be the first ones that are saying if they mine the Straits of Hormuz, the Chinese are going to pay a huge price. And every other country in the world is going to pay a huge price. We will too. It'll have some impact on us. It'll have a lot more impact on the rest of the world. A lot more impact on the rest of the world. It would be a suicidal move on their part.
The U.S. has said the strikes obliterated Iran's nuclear capabilities, but were not about toppling their regime. Still, President Trump has been musing on just that topic in a social media post, asking why there wouldn't be a regime change. We've also heard from Iran's foreign minister, accusing the U.S. of betraying diplomacy.
The world must not forget that it was the United States which, in the midst of a process to forge a diplomatic outcome, betrayed diplomacy by supporting the genocidal Israeli regime's launch of an illegal war of aggression on the Iranian nation.
Let's get straight to the White House now. Our Washington correspondent Tyler Kendall is with us. So Tyler, give us a state of play in terms of what we're at the moment, clearly watching for the next move from Tehran, but also some interesting ponderings from the president when it comes to this prospect of regime change.
Right. So we haven't seen President Trump today, but that doesn't mean that we haven't heard from him in a flurry of posts on Truth Social. You mentioned one of them there, though we should say at the moment it's not totally clear what conditions or circumstances the U.S. would need to see when it comes to getting behind regime change. But the U.S. by and large has touted this operation as being successful, in which no U.S. military service members were lost and Iran didn't fire at U.S. military assets. But one of the big questions that we are still waiting for additional details on include the full extent of the damage at these nuclear sites. We heard from the International Atomic Energy Agency earlier today, which briefed the UN Security Council and said that their inspectors cannot get in at the moment to survey the damage at these sites. The Vice President, J.D. Vance, did say that the U.S. feels confident that it has set back Iran's timeline when it comes to trying to develop a nuclear weapon and their nuclear ambitions. But he also did signal that Iran still holds on to a stockpile when it comes to enriched uranium. Now, the big thing for the U.S. going forward here is that they want to spur these talks with Iran, with President Trump threatening further action if Iran doesn't come to the negotiating table. But the thing is that we've heard from Iranian officials today, and they have reiterated that they're not going to enter into these talks unless the strikes against them halt first. Now, the U.S. is preparing and anticipating any sort of Iranian retaliation, and we should say that could look like a few different options that are on the table, but our analysts at Bloomberg say that it actually may end up being tempered for a few different reasons. That includes a weak economy, also domestic discontent, but also importantly that we haven't really seen much from Iran's strategic allies beyond rhetorical support, and that of course includes China, which, as you mentioned at the top of the program, is one of the top importers when it comes to Iranian oil.
Tyler, what else are we hearing from Washington? There have been some concerns about whether this move was constitutional. What are we hearing?
Right. So this really has to deal with something known as the War Powers Act of 1973. We're going to hear it come up a lot this week in Washington as congressional lawmakers are really pushing for potential changes, a resolution to that War Powers Act that would have given Congress the ability to authorize these strikes ahead of time. Now, the White House does say that it has complied with the War Powers Act and that they did notify Congress. Defense Secretary Pete Hegseth said that they did notify the leaders, House Speaker Mike Johnson and John Thune, immediately after the mission was complete. But it is raising questions here about the president's authority, since it really does fall to Congress when it comes to declaring war. But we should say that presidents of both parties in the past have used their authority when it comes to targeted military action.
Particularly since 9/11, right? It does go to the question, does this sort of create further divisions within the GOP at a time when it is pretty fragile for President Trump? What is his sort of support looking like, both within the party but also to his base, you know, a lot of which sort of believed him when he said that there would be no new wars?
Right, it definitely threatens to deepen a rift that we are seeing when it comes to the GOP, considering that President Trump did campaign on getting the U.S. out of foreign entanglements. But importantly, one of his most prominent backers when it came to that idea of more an isolationist approach was actually Vice President J.D. Vance on the campaign trail. That was part of why he was actually chosen for that role. You may recall he's one of the staunchest opponents of additional aid to Ukraine when it comes to that conflict. But we've really seen the Vice President, not surprisingly, unsurprisingly, come out and rally behind President Trump and trying to tell the base of supporters that this really, they should have trust in the president when it does come to this issue. He has tried to make that point that he is acting with as much knowledge as he has, and that the White House has said that he has actually always called for the end of Iran's nuclear program. And that's where that messaging, particularly about a potential regime change, would get really interesting, because the White House's defense to the base so far is that this is all about the nuclear program. The other quick thing to watch is who is advising the president on this. We know that in recent days he's heard from some pretty hawkish advisors, including Senator Lindsey Graham, a Republican from South Carolina. Our reporting indicates that they have had multiple calls over the last few days, and perhaps that is where we start to see sort of the tension and the push and pull when it comes to the Republican Party.
Tyler, as you allude to, this is a fast evolving situation. What would you say is the most important thing to be watching in the next couple of hours on the course of the conflict?
Well, we're definitely watching to see how Iran could potentially retaliate here. And there's a few different ways that the situation could escalate if Iran ends up choosing to really go hard when it comes to their response. One would be hitting energy infrastructure in the region. The other would be targeting U.S. assets or personnel in the region. But the third, of course, as you were talking about before, would be closing the Strait of Hormuz, where we know 20% of global oil flows go through there. Now, Iran's parliament earlier today did vote to close it. That doesn't mean that it's going to happen. That would take a decision from Iran's supreme leader, but that would have really big consequences here, particularly for their strategic allies like China. And it's something where the U.S. would also likely have a response, since this is going to also be a political pressure point for this White House, considering President Trump campaigned so heavily on bringing down the costs, particularly when it comes to energy. Now, we did hear from some U.S. officials pointing out that it wouldn't be economically viable for Iran, considering that they would be impacting their own exports when it comes to this.
The world awaits Iran's response. Tyler, thanks so much. Bloomberg's Washington correspondent Tyler Kendall for us. Let's now bring in Jonathan Panikoff, director of the Scowcroft Middle East Security Initiative at the Atlantic Council. He previously served as Deputy National Intelligence Officer for the Near East at the U.S. National Intelligence Council. Really good to have you with us. First off, it's really difficult to overstate the significance of now having U.S. involvement. But what's your initial assessment about how this is going to shape the conflict?
Thanks for having me. Look, I think it's really going to be dependent on what Iran's response is, just as Tyler alluded to a moment ago. I think there's really two ways to think through this. One is, if the Iranians decide that they are pragmatic and that they are trying to ensure regime survival, which has always been the regime's priority, then there's a chance that Iran is going to look to hit and target U.S. bases in the region, U.S. assets in the region, but do so in a way that limits damage, as well as ensures that there's really no U.S. deaths of service members. There is some precedent for that. So in terms of how Iran responded to Israeli attacks in October of last year, and the base that it hit, but also how Iran responded to Trump's decision to kill Qasem Soleimani, the former Quds Force chief, back in January of 2020. That's the type of action they took. The flip side is that the Iranians say, look, the regime is under threat, we're at risk. They close the Strait of Hormuz. They target U.S. assets and personnel in the region. You have significant deaths, and then we end up into really an escalatory spiral in which the U.S. is compelled to respond.
How far do you think Washington would go? I mean, what is the end game, you think, in that event for the Trump administration?
I think the end game is going to be that the Trump administration, in that event, if the Iranians really go hard in their response, is that they're going to try to go over the top and respond equally as hard, if not harder, to try and convince the Iranians that they can't escalate nearly as much as Washington can, and that's true. The Iranians are already having us trouble keeping pace with the Israelis. They're going to find it even more difficult to keep pace with U.S. pressure and U.S. capabilities militarily in the region and frankly beyond if they try to go hard back at the U.S.
What are the options when it comes to the future of Iran's nuclear program? I guess there are options to be able to step down from this. The question is whether diplomacy is still on the table while strikes continue. But also, is there a sense that perhaps it may convince the leadership to hold on even firmer and, play into more of that conviction that they do need nuclear capabilities given what's happened?
Iran isn't a monolith. At the end of the day, the supreme leader has ultimate control and will make the decision. But you're going to have a debate within the Iranian system. You will get folks that are more pragmatic that say, look, we want civilian nuclear power. We need to be able to show something for all of this investment, probably about $500 billion over the course of the program in terms of investment and lost revenue due to sanctions of forging ahead on its nuclear program. But the pragmatists are going to say, it's not worth it. We can't simply just rebuild this in a meaningful way. You'll get others that say, no, look, we should be rushing to a bomb using whatever material we have left. And I think that's a real concern. There's already some reporting out there that in the last few days before the strikes at Fordo, the Iranians had unusual truck activity that could indicate, for example, that they were moving some of the highly enriched uranium to other sites. It wouldn't take a lot from the highly enriched uranium they have at 60%, combining it with a few hundred machines and a pretty small footprint at a secretive facility to imagine the Iranians continuing their work and efforts on their nuclear program. So there's going to be a debate within the system.
I wanted to get back to your initial point about how Iran is no monolith, right? There are reformists, pragmatists, perhaps even more hardliners within these factions that have been jostling already, even before this happened. What do you think the risks are if there is a change to leadership? Could we result in a more confrontational representation there?
It certainly could. Look, there's obviously been this question of regime change and whether part of the Israeli calculus is regime change. I think President Trump's tweets this evening on Truth Social are going to add some curiosity to the mix in terms of whether the U.S. is changing its position. But the regime change is a bit of a double-edged sword. I think there's certainly a potential that what comes next in Iran is not democracy, but IRGC-istan. In other words, you have almost a military junta-like dictatorship with a fig leaf to the current theocratic autocracy. I think that would certainly be potentially hardliner because you'd be having individuals jockeying for power, jockeying for position, and in order to secure them, usually what happens in these types of situations is people become more extreme, not less, to show that they are alone and can convince hardliners and can actually have the forces, the Quds forces, the army, they're backing that, they're worthy of it. So I think there is a real challenge here. There is a real risk. There's a large history, obviously, in a lot of Americans' minds because it's quite recent of what happens if you have regime change. And so I think that's going to be a real concern going forward here.
Jonathan, what about in terms of the reaction that we could see from other Gulf states in the days ahead? I mean, they had been, for the most part, recently advocating a bit of rapprochement when it comes to Tehran. Obviously, that seems to be a bit of a distant reality at the moment.
I think most of the Gulf states publicly are going to condemn what you saw in terms of the U.S. attacks, but do so gently. I think privately behind the scenes, the messaging from at least some of them is going to be significantly different. But the reality is they're all going to be quite concerned about the potential for Iranian missiles or rockets raining down on their countries, even if it's U.S. bases in their countries. Navcent, which is headquartered at Manama, is a really good example of this. The Bahrainis certainly are not going to want Iranian missiles targeting U.S. personnel and assets in their country. The second part of this is, look, we're going to see what happens with the Strait of Hormuz. You noted the parliament had voted to close it. That really doesn't mean much. The truth of the matter is you've got a fifth of the world's oil running through the straits, about a quarter of LNG. It will skyrocket prices. And yes, it will be a problem for the Chinese, who are very much reliant on it. But it depends on how long it's for. It could also create pressure in that the Iranians want to do this to try to get the Chinese to serve as their proxy to pressure the U.S. in order to try to get to a resolution much more quickly. I think all of those options are on the table.
Jonathan, before we let you go, is it too soon to write off Iran's proxies?
It's not too soon. They're diminished but not out. I think proxies like Hezbollah and Hamas are unlikely to engage at this point if they haven't already in a meaningful way. But Iran has significant proxies in terms of Iraqi Shia militants, and there are still U.S. forces in Iraq, and they certainly could be part of a reaction or a response, I should say, by Iran to U.S. strikes that happened from President Trump on Fordo, on Natanz, on Esfahan. And of course, the Houthis remain still out there. I think the Houthis are a little bit diminished. Clearly, their ability to fire missiles has been reined in, and there may be a question of whether they're facing a shortage as well. But the proxies diminished are not by any means destroyed completely right now and still could be a threat.
Jonathan, really great to have you with us. We appreciate your insights and time. Jonathan Panikoff is a director of the Scowcroft Middle East Security Initiative at the Atlantic Council. Coming up next on the Asia Trade, we'll be taking a closer look at how these developments across the region are impacting the global economy with the IMF chief, Kristalina Georgieva, plus analysis with a former US ambassador to Iraq and Kuwait and the Center for Strategic and International Studies. Much more ahead. This is Bloomberg.
We're watching for the market fallout amid the U.S. involvement in Israel's attack against Iran and looking at some safe haven bids now. The dollar is gaining ground almost all its G10 peers and a bit of a risk-off when it comes to U.S. futures. For more on how markets are reacting as they open in Asia, we go across to Bloomberg editor Romain Bostic. Romain, we're seeing somewhat of a muted reaction today. I mean, how much has already been priced in to the markets?
Well, quite a bit. I mean, here in the U.S., keep in mind that stock indexes had been down about 1.5% or so. Remember, a lot of this sort of started when we had those first strikes by Israel on Iran. That was late on June 12th U.S. time. And then when markets opened on June 13th, you saw a big sell-off there. You saw a huge spike in oil. Remember, Brent crude has rallied about 20% just over the past 2.5 weeks or so. So a lot of this was baked into the market. You were just looking at U.S. futures there on your screen, which opened up about an hour and a half ago. You did see a big spike lower, down about 1%, but most of those losses were paired pretty quickly. You saw a similar story when it came to what happened in the commodity space, a big spike higher, about 4% or so on Brent and WTI crude, and that peeled back just a little bit. There's a lot of what-ifs out there right now, Avril, and that's really what this market has to contend with. The big question is, what is going to be the response by Iran? On top of that, people want to know, well, what are we going to hear from Europe? What are we going to hear from China? What are we going to hear from Japan? I think when we start to get a little bit more clarity as to what other world leaders have to say about this, what Iran's retaliation could potentially be, and of course, what the U.S. and Israeli response would be to that, I think you might get some more definitive moves in the market.
Yeah, it's quite interesting, the kind of muted moves that we're seeing at the moment, particularly not a lot of gains when it comes to bond havens, right? Is there a possibility that these markets could rally if there is sort of, a confirmation that we have, in fact, seen those nuclear capabilities destroyed, because that the verdict and the evidence is still out on that?
It's still out on that, but two people actually raised this to me. I found it kind of surprising. I spoke with two market strategists here in the U.S. Earlier this afternoon, and they basically said that, look, one of the biggest risks to stability in the Middle East has been Iran, whether it was its nuclear program or its funding of various proxy militias around the region. If those elements have indeed been obliterated or at least significantly tamped down, and if there is confirmation of that from a credible source, that removes a major risk. And a case in point, I think is what you've seen over the last few days in Israel's benchmark index. That's the Tel Aviv 35. It's on a 6-day run. And remember, it trades Sunday through Thursday, and it closed on Sunday at a record high.
Romain, what about the safe haven of choice at this point? Are bonds definitively going to benefit less from such a play
I think right
than
now,
the dollar?
Yeah, well, as far as bonds go, I think this is also a situation where a lot of that was priced into U.S. Treasuries. We should also point out that U.S. Treasuries are having to contend with a lot of other things, such as the fiscal situation and other domestic issues that are going to have a greater impact than the Middle East issues. But FX is going to be the big play here. You are seeing strength in the dollar here. Surprisingly, you're not seeing as much strength as some people thought we would have in the yen or even in the Swiss franc. Maybe ratification that despite all of the talk about the demise of the dollar, it is still viewed as a haven asset, as a benchmark asset, as of course it is the most liquid and in the eyes of a lot of people, of course, it offers the most stability. So maybe that ends up being a beneficiary. Of course, we should point out the dollar on a year-to-date basis having one of the worst starts to a year in its history.
The very quick pricing of the spiralling conflict has taken place for markets, but I do wonder what sort of catalyst are we looking for that to potentially then feed into the next thing, which is whether the Fed or other central banks change their calculus when it comes to inflation.
It all has to do with inflation and whether we see a sustained spike in oil prices. Remember, they are elevated. We're trading right around $79 a barrel on Brent crude. And remember, we haven't been at these levels since basically early January. So at a time where everyone is worried about the potential for inflation, a sustained increase in those prices. And remember, it's not just oil prices, but natural gas prices as well. Both two commodities, of course, that are heavily dependent on those shipping lanes coming out of the Strait of Hormuz. And a big question right now is to whether Iran will or even has the capability of choking up that strait and preventing the supply of oil and gas from flowing out of the region. If that is the case, most of the strategists here on Wall Street have modeled in estimates of Brent crude above $90, even maybe potentially approaching $100 a barrel. And yes, that would be an inflationary shock, and that would be something that central banks, including the Fed, would have to deal with.
Romain, do the moves in crypto tell us anything about sort of the underlying sentiment that we're seeing here?
Yeah, the moves in crypto were quite interesting. We actually saw a pretty big drop earlier in the session here on Sunday morning in the United States. Ether was the biggest drop, down about 10%. Bitcoin plunged about 6 to 7%. You're seeing the numbers now on your screen. This is the new session. Basically, we did see a little bit of an uptick. Bitcoin back above the 100,000 level. But it adds to this question about whether it really is being traded as a haven asset or whether it still remains a speculative asset. And I think the drop down that we saw early in the session was maybe indicative of the idea that it is still a speculative asset, at least for a lot of those folks who trade it. And when risk was off, as it was earlier in the session, we saw prices down. But now with risk maybe potentially coming back on, you see prices modestly elevated.
Romain, great to have you with us. Our Bloomberg editor and co-anchor of The Close, Romain Bostic, there with a look at those markets as Asia wakes up for their reaction. And Bloomberg subscribers can get more on TLI if you go on the terminal for the latest commentary, analysis from our editors. This is Bloomberg. Let's take a look at some of the other stories that we're following this hour. And British Airways at the moment is in focus as we continue to monitor really some of the geopolitical risks that we're seeing at the moment. Of course, we're watching to see what that next reaction is going to be from Iran after the flurry of US attacks over the weekend. But take a look at what we're watching when it comes to the aviation space. We saw the cancellation from BA of several flights to Dubai, including diverting 2 planes. It also halted some flights to Qatar and Bahrain. Singapore Airlines cancelling 2 flights on Sunday between Singapore and Dubai, warning that other flights may also be affected. Major US cities, including New York, Washington and Los Angeles, are tightening security after Iran warned that it was reserving all options to respond to the US strikes. Police have increased patrols at religious institutions, diplomatic facilities and public spaces. Officials say no credible threats currently exist, but are urging people to be vigilant. Ukraine says Russia is showing no signs of winding down its war in Ukraine. The Ukrainian military's commander-in-chief says Russia still has almost 700,000 troops deployed and another 121,000 in strategic reserves. And President Volodymyr Zelensky has alleged that Kyiv has evidence that Moscow is preparing new military operations on European territory without giving further details, April.
Yeah, the focus still really is on what Iran's response to the U.S. moves over the weekend is going to look like. We're seeing a bit of a risk off, 1/3% down when it comes to U.S. futures. It's interesting, though, a lot of it has seemed to already have been priced into the market. This is Bloomberg.
Take a look at what we're watching when it comes to oil prices at the moment. It's interesting. It almost feels like the calm potentially before the next round of volatility, as we have seen some of the tops when it comes to oil potentially looking a little bit more baked in after that US attack on Iran. The spike is sort of ramping up the risk to supplies there, of course, as we saw those 3 main nuclear sites being attacked over the weekend. We saw a rally when it comes to benchmark Brent of just shy of about 6% there, but really it does dramatically raise the expectations of confrontation, potentially the threat to the Strait of Hormuz as well, is what we're watching at the moment, given some of the domestic conversation within Iran about a possible blockade. But this is what we're seeing across the region as Asia starts to price in some of those risks. Let's get more on the perspectives when it comes to oil markets amid these ongoing tensions. Joining us now in Sydney is Claudio Galimberti, who's a chief economist at Rystad Energy. Claudio, great to have you with us. And if you take a look at Brent prices, while we are off session highs at the moment, still noticeably higher from the highs of last week. So what does that tell you about the mentality of what we're seeing amongst oil traders right now?
Thank you for inviting us. It tells me that there is a huge geopolitical risk premium which keeps on increasing. So it was just before the U.S. attack about $10 per barrel. And right now there is the risk it can go up as high as $15 per barrel in the course of today. So initial price reaction is still, I would say, muted to some extent. So we see Brent at 78. It was 75 at closure on Friday. So it's about $2-3 higher. It could be much higher, depending on what Iran decides to do.
And that obviously has to do with whether or not we see a partial or complete blockade of Hormuz.
Correct.
What risk do you assign to that, and what do you see as the impact? Obviously, it impacts different importers in different ways.
Well, the parliament in Iran just stated that they should go for the blockade of Hormuz. And now this is easier said than done. It's a very large piece of, strait, right? So we need to understand the fact that no one would benefit from it, not even Iran itself, because the export of Iran goes through the Strait of Hormuz. But this is an extreme situation, right? So Iran has been attacked, and the regime might want to retaliate. And retaliation, at this point, the Strait of Hormuz is one of the prime targets. So we need to watch very closely. 30% of the oil and water goes through the Strait of Hormuz. So any form of disruption would have a very, very significant...
Where do oil prices go if we have that worst-case scenario?
It can go anywhere, between 80 to 90, even $100 per barrel. It depends on the extent of the disruption. It depends on the duration, right? So from this standpoint, we still believe that, a full blocking on the strait would be extremely hard to implement. It requires a lot of military equipment, but it's also, you would have pretty much the entire world against it, because no one benefits from choking this, probably one of the most vital strait for the world economy, right? So the country that would be fully against it is China, and China is one of the allies of Iran right now, right? So China and Russia have been on Iran's side, and therefore China for sure wouldn't be for such an occurrence. And that tells me that it's definitely a tail event, But we need to be very much aware that this could happen. And if that happens, then you can have a price flare-up that can be extremely high. It can be Brent can go in triple digit. It depends, right, on how much oil gets disrupted. So,
Claudio, since you mentioned China, how much pressure do you think Beijing would be able to exert on Tehran if it decides to choke off the Strait of Hormuz? Again, as you say, this is a very extreme course of action and might not actually materialize. But, you know, what are we actually talking about here when it comes to China and Iran?
So currently China buys everything, all the oil exported by Iran is bought by China. We're talking about 1.4 million barrels per day. Therefore, we may argue that pretty much there is a huge financial dependence of Iran. Iran when it comes to China. So the pressure there is a multiple front. Consider that Iran has these allies that are Russia and China primarily. And the situation is very complicated, but I would say that the blockage of the Straits of Hormuz is going to be very hard. But we need to consider that as one of the potential for the next few days. And specifically when it comes to the retaliation by Iran, that's not the only thing they can do. They can target other oil facility in the region. And the region produces a huge amount of oil. You have, of course, the UAE, you have Saudi Arabia, you have Kuwait, and so on and so forth, and you have Iraq. Now, the United States was very clear yesterday, any form of retaliation would be met with extreme force. So that, of course, increases the risk of a flare-up and of potential damage to oil facility in the region.
Even as we wait to see what Iran will ultimately do, we've already been seeing some signal disruptions, other sorts of disruptions as well in the Strait, maybe also because of shipping concerns going into the waterway. How much disruption are we ultimately already seeing at the moment?
So, I mean, what we've seen is that first of all, ships now tend to go through the Strait of Hormuz on the Omani side, right? So this is the first and obvious, the easiest thing to do. What we've seen is that some ships have been diverted, so they decided not to go through the straits for the risk of being targeted. So up until the weekend, we hadn't seen any disruption in the flow. So that's the reason why the price was obviously we had a very high risk premium, but not extremely high. But what happened over the weekend clearly changes completely the dynamics, because right now we have the United States has entered the war on the side of Israel and against Iran, and this changes completely the dynamics, and therefore the situation is now completely changed. So we could see, as a matter of fact, a huge decrease in the flow of oil over the next couple of weeks. So we just need to monitor. At this point, it's so early that it's very difficult to assess. But what we can expect is that there's going to be a lot of volatility in the market in the next couple of weeks for sure.
Claudio, what do you think the likely response from OPEC Plus is going to be?
So OPEC Plus, this is very important, because what we have seen is that of course, we are going through an extremely volatile period in the Middle East. Israel attacked Iran already 2 weeks ago. And what we have said is that the OPEC Plus has a lot of spare capacity. So we're talking about almost 6 million barrels a day of production, which is kept offline as a result of the successive production cuts that the organization made over the past 3 years. So this is a very important cushion, because imagine there is a a facility which is hit somewhere in the Middle East. Maybe 100,000 barrels per day are basically taken out. But there is this 6 million barrels a day of capacity that can come online at any point in time. The problem, though, is that it all sits on north of the Strait of Hormuz. So even if this spare capacity is brought back online, it still needs to go through the Strait of Hormuz. So this is very important to bear in mind. But it is a fact that at least we have the ability to deploy some capacity by OPEC Plus, which is considerable. Also, very important, Saudi Arabia can direct some of its production from east to west using a pipeline, bypassing the Strait of Hormuz. Also, the United Emirates, they can use a pipeline to Fujairah to bypass the Strait of Hormuz. Therefore, there is the ability to kind of address any problem through the Strait of Hormuz, but it's not going to be the 20 million barrels a day that go through the Strait of Hormuz on a daily basis. Probably you can redirect 6 to 7 million barrels per day. So it's Strait of Hormuz remains an extremely important deal right now at this point.
Right. That's a key point, having the spare capacity, but what about having it move around where it needs to go? Claudio Galimberti, chief economist at Rystad. Angie, thank you so much for your insights. Now, China has criticized the U.S. strike on Iranian nuclear facilities, saying again that it's willing to join international efforts to restore peace in the Middle East. And U.S. Secretary of State Marco Rubio is calling on Beijing to ensure Iran keeps the Strait of Hormuz open.
Well, I encourage the Chinese government in Beijing to call them about that, because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours.
Good. All right.
Let's bring in our China correspondent, Min Lo, for us. So, Min, what are we hearing exactly from the Chinese side?
Yes, China has condemned the U.S. attack on Iran's nuclear sites. We know that China has previously called on the U.S. to do more to calm the conflict, but I guess attacking the nuclear sites isn't exactly China's vision of calming the conflict. In fact, there is a Global Times editorial that really criticized how the U.S. is escalating the conflict even more by entering the fray and using more higher level weapons to escalate things even further and destabilizing the region. And China says that Iran will likely see this as an act of provocation. It could threaten to spill over this conflict to the wider region. So China is extremely against this move from the U.S. But of course, analysts are saying that the fact that U.S. is engaged in this war in Iran, it is a distraction for Washington from the strategic competition with China. So that's a side benefit that China could reap from this in some ways. But China's stand is still the same as before. They strongly condemn the attack from Israel and from the U.S. They continue to call on all parties, especially Israel, to cease fire, and says that they are willing to do what they can to mediate or facilitate peace and stability in the region, but nothing beyond that rhetorical support so far.
Yeah, it's interesting that no sort of meaningful support has really been given in terms of beyond normal trade relations, right? But what do we know in terms of the outsized impact that any sort of Strait of Hormuz blockade would have on China in particular?
Yes, China relies on the Middle East for nearly half of its energy needs. And as you heard from the analysts earlier, China imports almost all of Iran's oil, crude oil. And so it does have some leverage over Iran. And as Marco Rubio also mentioned, it is in some ways economic suicide for Iran if it closes that Strait of Hormuz, given that 85% of Iran's exports come from its energy exports. So it's a very sort of critical choke point here. And as the analyst said, it could be quite difficult for Iran to actually close that. Iran controls the northern side of that Strait of Hormuz, and Saudi Arabia, Qatar controls the southern side of the strait. But China right now, according to official statistics, Russia is still China's largest source of energy imports, and it does have imports from other countries in the Middle East. And as the analyst mentioned as well, there are these alternative pipelines that Saudi Arabia and Emirates have. Although the capacity is limited, according to the U.S. Energy Information Administration, they can free up additional about 2.6 million barrels of oil per day on average, but that's a drop in the bucket compared to what the Strait of Hormuz handles a day, about 20 million barrels a day. So, of course, markets are already pricing in the risk of potential disruption to oil flows.
Bloomberg's China correspondent Min Min Lo there with the latest. More ahead on the Asia trade. This is Bloomberg. Take a look at how we're setting up. We're just 15 minutes away from the start of cash trading here in Australia. We're seeing decidedly lower outlook when it comes to Asian stocks, likely to really follow the track of US futures lower there as well, as we continue to watch what goes on with the Strait of Hormuz and those risks to global oil flows as the Iran and now US involvement in this conflict continues. Well, the International Monetary Fund will also be closely watching the impact of the US strike on Iran. Let's get over to Tokyo. Our co-anchor Shery is standing by with our next special guest. Shery.
And Haidi, perhaps lower and more pressure on the global economy, given, of course, the ongoing uncertainty, not only from geopolitical tensions, but also from the trade environment. Joining me now here is the IMF Managing Director, Kristalina Georgieva. Managing Director, great to have you here in Tokyo. Welcome.
Thank you.
It's very difficult to say right now how these geopolitical tensions in the Middle East will unfold. But at this point, what is the IMF watching very closely on how this could impact the global economy?
We are looking at this as another source of uncertainty in what has been a highly uncertain environment. And we are watching for two things. One, how would that impact risk premia for oil and gas? There has been some movement upward. How far would it go? And two, would there be any disruption in energy supplies? For now, no, but let's see how events would develop, whether either the delivery routes or spillovers to other countries may occur. I pray no.
Right. Is the transmission mechanism, the channels where you're seeing the biggest Middle East shock in energy prices at the moment?
It is in energy prices, yes. Of course, there could be secondary and tertiary impact. Let's say there is more turbulence that goes into hitting growth prospects of large economies, and then you have a trigger impact in a downward revision of prospects for global growth. As you know, we have already revised the downward growth projections for this year, and we will be coming up with our next projections in July. So far, what we see in the first 2 quarters of the year broadly confirms the picture we have painted in April, and it is somewhat slower global growth, but no recession.
Especially when it comes to the United States, you also upped the potential of recession risk in your last update in April.
Indeed, indeed. We went up to nearly 40% risk of recession. Yet, when you look at the probabilities, still there is a higher probability that the US in this year may avoid recession. But please, let's not rock the boat any further.
Especially given that we have inflationary risk as well, right? Given that we do not know where energy prices will end up being, but at the same time, given the transmission mechanism, is stagflation risk in the US a real concern?
For now, we see the disinflation in the United States continuing, but not to a point in which the Fed feels comfortable to cut interest rates right now. What we expect towards the end of the year is possibly for the Fed to apply judgment that time may have come for some adjustment of interest rates downwards. We are not seeing dramatic change in the US. Labor market remains strong. We see 4%, around 4% increase in pay. What does it translate into? Consumers feeling more comfortable to spend. But the more there is uncertainty, the more there is volatility, the worse it is for business. When there is uncertainty, what happens? Investors don't invest, consumers don't consume, and that holds growth prospects down.
And it really complicates the matter for the Federal Reserve, and yet you still expect them to at least be able to act if conditions were kept until the end of the year.
Well, I mean, inflation has been going down. It is almost to target. At the same time, there is a little bit of slowdown in economic activity, and that could lead the Fed to apply judgment that the time has come for some reduction in interest rates. But for now, they are saying, well, let's see what next, because, as you said, we don't know whether there may be upward pressure from energy prices on inflation. We don't know whether the tariff situation would stabilize. There have been some positive steps, some agreements already in place, a commitment to continue to negotiate, but that has not yet been finalized.
The blanket tariffs, the pause ends on July 9th. We don't know which way that will go, right? We have seen this ongoing uncertainty and, of course, the geopolitics as well. A little bit of a lack of confidence when it comes to American assets, whether it's the US dollar or treasuries and volatility around that. Do you expect that to continue? I guess my question is also something that has been asked a lot, the end of US exceptionalism.
Well, let's recognize two things. One, the US economy is very dynamic. It is an innovation-driven economy. It is one of the very few where productivity has been growing, much stronger than in the rest of the world. It has very deep and liquid capital markets, and it attracts financial flows for all these reasons. When we look at the size of the US economy, say about a quarter of the world economy, and then we look at the size of financial assets in the United States, which is almost 3/4 of financial assets of the world, inevitably there would be some thinking maybe there has to be more diversification to other places. What is the problem? The rest of the world economy doesn't show the same dynamism and profitability for money to fly there.
Are you seeing more of that here in Japan?
I am impressed by what Japan has been doing over the last years. We have seen monetary policy normalization proceeding robustly, steadily. Japan's growth is very close to potential. We assess potential growth at around 0.5 percentage point. Japan, we expect to grow this year, maybe even 0.6%. But aging population and limits to that ability to offer more dynamism means that policymakers and businesses have to do more.
And it's so difficult for the Bank of Japan that's trying to normalize and hike rates, and we're seeing this divergent monetary path around the world. That brings its own risks.
It is a very different world today than what we had right after COVID. Right after COVID, we had central banks going in a lockstep. Monetary policy opened up more space for injecting liquidity in the economy. So monetary policy, fiscal policy, all over the world, pretty much doing the same thing. Now we are in a very different place when monetary policy around the world has to go in different directions. We have in some countries monetary policy, some tightening. We see some countries actually losing, getting a bit more space through monetary policy. And why is this difficult? It is much easier if you can sit in your chair as a governor of a central bank, look around and say, everybody is cutting, I'm cutting as well. Or everybody is tightening, I'm going to tighten as well. Now we are in a place where everybody has to judge on data for their own conditions.
Managing Director, really good to have you here in Tokyo. Kristalina Georgieva joining us, of course, of the IMF here in Japan, April.
Shery in Tokyo for us. Let's take a quick look at how futures are faring in the Asia Pacific. Likely to be a risk-off day based on what we're seeing. Plenty more ahead. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And Haidi, for much of the past week, we have been waiting to see the extent in which the U.S. would be directly involved in this conflict with Iran. Now that it's being drawn into Israel's attacks on Iran, it's also really interesting how there's still not much clarity when it comes to markets, particularly for oil.
There's also not much clarity when it comes to exactly how much of those nuclear capabilities and materials have been destroyed, right? The evidence is sort of conflicting in that sense. We wait for more clarity on that. We wait for more clarity when it comes to Iran's sort of domestic approach and strategy when it comes to the Strait of Hormuz, because that's obviously going to determine where we see oil prices go next.
Yeah, and as some of our analysts were pointing out earlier, it's also about the extent in which OPEC Plus can channel its spare capacity in the event that Iran takes a very extreme course of action. But today, we are seeing that bit of risk-off filtering through into the stock markets. But this muted response, following on from what we already saw in U.S. futures, perhaps this speaks to the sense of how difficult the geopolitical situation has been for investors to position. The yen moves perhaps capped or offset by what we're seeing in the gains in the US dollar. Now flip the board and take a look at what we're seeing in Korea as well. Likely to see a bit of that risk off in markets there. The extent of the decline much more severe than what we're seeing in Japanese stock markets. And again, watching out for the signs of the dollar short squeeze, seeing the Korean won on the back foot there, Haidi.
Take a look at what we're watching when it comes to Australian assets at the moment. Quite decided downside when it comes to just a staggered start to trading here has become online for the ASX, but stocks already seeing somewhat lower, about 0.4%. They were also seeing that back foot trading when it comes to the Aussie dollar, a clear kind of assessment of risks there. Also, what's been quite interesting is that muted reaction we've seen across treasuries. Clearly not one of the key beneficiaries when it comes to this sort of haven rally. These initial gains in oil are seeing that sort of fade as well as we wait for further developments. In terms of Australia's position, it's interesting. We've had some breaking news just over the past sort of hour or so, abandoning its previous neutral stance on Iran and those strikes, and backing US President Trump's strikes on those nuclear facilities. A pretty major departure in terms of Australia's position there. Let's bring in now George Boubouras, who's the Managing Director at K2 Asset Management. So in a sense, I mean, clearly the risk assessment is changing sort of minute by minute and hour by hour. What are you watching for at the moment, and where this could progress from here?
Good morning. Good to be here. A number of moving parts, but first and foremost, as investors, we always reinforce alert but not alarmed. We're always looking through uncertainty to see what comes at the other side. And in this case, the geopolitical event is just that. It's concentrated at this stage. And even though people call it complacency or muted response, we are fully invested across the asset classes, and we don't see, and there won't be any hard data impact of what's just happened over the weekend with the US and Iran. And obviously 2-3 weeks ago, when Israel started to intensify those bombings into Iran, there was a amplified vol pickup at the time, and risk off across the different asset classes. And but just to reinforce is that for here and now, geopolitically, we'll wait and see if there's a response from Iran, and that would take some time. But the thing to reinforce is that the week ahead has got PCE deflator from the US. We've got commentary from the Fed last week. We know the hard data is more resilient but slowing. And we know the soft data in the US is quite weak. And it's the lowest correlation of soft data to hard data. That's keeping us awake as we're trying to gauge what the future credit conditions and impact to earnings will be and the bottoming out of the US earnings cycle. That's what we're trying to find out and through the hard data month by month. And we'll just keep doing that. And these events over the past 24 hours and geopolitical events, they'll come and go. But again, finishing where I started, people are calling it complacency and muted response. We are actively looking at it, and there's no real need here to be selling assets across the board. We're just fully invested across the asset classes, all parts of the capital structure, and it seems quite reasonable, the prices there, given where one-year earnings are, even though they're weakening.
What changes that for you then, George?
Hard data changing. Hard data changing. So we know, for example, why is there a muted response, for example, for oil price? Well, it's very convenient that the Saudis increase supply into the global market to help cushion the GDP detraction from the trade wars. So it's not quite like for like, but that is a good cushion for the year ahead. So that's context that's quite important, and that's a muted response to oil. Also, the US has got the independence to energy, and that's also quite convenient. But we need to find out how the trade wars are impacting the hard data in the second half. And the survey data has got that, it seems to have a low correlation to predictability at the moment because it's so severe on the downside, and it's quite resilient so far. So if we get 1 to 2 readings of hard data that's quite weak, then we see that you have to what do the Federal Reserve say? At the moment, they're being quite cautious, even though PCE deflator is well in check. They're sitting back, rightly so, and to see what sort of outcome, because the US is going to roll out the deregulation and extension of tax cuts in some form. So again, I'll reinforce it. What's the impact to hard data? What's the verification of that? And what's the impact to the earnings? At this stage, it's slowing, but it's resilient relative to expectation, which is the survey data.
George, I was just going to say, it's almost easy to forget that we are still in the midst of a trade war. I mean, as you alluded to, net, what do you think the impact ultimately is going to look like, not just in the second half of this year, but perhaps into the first half of next year, especially on earnings?
Downside impact to earnings from the trade war in aggregate and downside impact to global GDP. Then there'll be a turnaround sometime mid-next year and upward revisions. Now, just to reinforce in some context again, active fund managers like ourselves, like many others, we are, and this may be an issue that we may be incorrect, but we are second guessing that a 10 to 30% global tariff range will be the outcome broadly, with some outliers in there. Let's just say China. That is, the world can absorb that. That is quite reasonable. The earnings impact won't be as bad, and the downside to GDP of up to 0.7% of detraction from global growth may not occur. But if it's anything outlier for long periods of time of 90 days, then we'll put downgrades to that. But at this stage, again, the tariffs are going to be a detraction. That's already priced in, and the IMF downgraded in April after upgrading in January. The hard data and the second order condition and the momentum of data is slowing, but not at the same rate that people thought, so it's resilient, and the earnings impact. But again, context, the Saudis' increased supply over the past 3-4 months has been a reasonable cushion and support to the tariff trade, but it's still net negative for global growth. But again, reinforcing, the Federal Reserve seems to be leading globally, where it's not reinventing its core inflation forecast to justify rate cuts. It's a wait-and-see approach to be what is the most reasonable outcome, and for them to sit back and say rate cuts in the second half of the year on the hard data slowdown verification seems reasonable, and that seems to be what we've been looking at, the way the portfolios and the risk across the capital structure.
George, while you were speaking, we've since heard from the Israeli IDF and how they have identified missiles being launched from Iran towards Israel, as we keep an eye on the extent in which Tehran is going to choose its response. And you're, of course, looking at some of these live pictures from Tel Aviv there, incredibly tense situation. I wanted to get your thoughts as well. What do you think the role of the dollar is amid all this?
A very good question. Even though we have been second-guessing the White House that they wanted a weaker dollar this year without an official status of that outcome, the thing to reinforce is that if there is a real big spike in volatility, something extreme, the dollar will be bid, as would the yen, US Treasuries will be bid, and gold will be bid again. So those things will come to the fore if there's a large kurtosis event or a large sigma event across the board. But at the moment, what is going to be concerning is that the headlines are very unpleasant. And obviously what's going on in the Middle East and the intensification of the conflict can be controlled, and there are implications for the key GCC Gulf states that have been doing quite well economically, particularly Saudi, UAE and Qatar, but UAE and Saudi have been the big beneficiaries of it, and UAE being the beneficiary of earnings outside of resources because of the large growth in banking and bank earnings, obviously with Dubai growing. So that will be on the pause and hold for the short term. But taking a step back, a large amplified volatility event, the dollar would be bid again in the short term, even though we're getting a sense of that weakness year to date is what the White House wants, but it's not an official outcome. But we see dollar strength in calendar 2026 as an FYI.
That's really interesting to hear, George. And indeed, I think we're seeing in the short term today, the dollar catching a bid. Thank you so much for your analysis. Really great to chat. George Boubouras is Managing Director at K2 Asset Management. Now, it's interesting. We've been seeing, right, Haidi, how there is a risk off today, but it is a pretty muted reaction, all things considered. The steeper movers are what we're seeing in terms of defense stocks. Those are the stocks that are kind of going against the grain of the broader market moves, both in some of these Japanese counters as well as what we're seeing in Korea.
Yeah, and of course, a key focus remains over what we see when it comes to pricing action within the oil space. And what's really kind of been quite interesting is that perhaps more than anything, even as we see some of those sustained gains across the oil rally, markets obviously weighing that risk after the US strike over Iran and what it means when it comes to the debate over the Strait of Hormuz, which could be targeted by Iran in retaliation. There's been a domestic vote on that. That has been really key. But of course, there's also been a lot of narrative as to who exactly that benefits, not even Iran, right? But certainly huge downside when it comes to markets like China as well. But this is a picture as we look at energy markets at the moment. Also watching energy stocks as well, particularly those that are trading here in Australia. There is a whole cluster of them. They would expect to see some volatility in trading there as well. But that initial move, interestingly, when it comes to oil trading in Asia, has been a little bit of a fade rather than much more of a spike. So clearly the lack of signs that supply disruptions are happening, at least right now, when it comes to international oil infrastructure, is creating a little bit more of a pullback when it comes to this market. But of course, we continue to watch what will happen. We've seen Israel refraining from targeting the main crude export terminal at Karg Island for Iran, and at the same time, there's no confirmation, at least at the moment, that Iran or Tehran will move against the Strait of Hormuz or its production facilities in neighbouring states as well. But of course, this is very much a breaking story and a movable feast. More ahead on the Asia trade. This is Bloomberg.
We have a window of opportunity to return to dialogue and diplomacy. If that window closes, violence and destruction could reach unthinkable levels, and the global non-proliferation regime, as we know it, could crumble and fall.
The bombing of Iranian nuclear facilities by the United States marks a perilous turn in a region that is already reeling. From the outset of the crisis, I have repeatedly condemned any military escalation in the Middle East. The people of the region cannot endure another cycle of destruction.
We do have some breaking news from the state-run IRNA citing Iranians Iran's foreign minister, I should say, on a visit to Russia, that Iran's foreign minister Agachi will be meeting Putin for talks on, quote, shared threats, according to this report. This, of course, is quite interesting because at the moment we see these sort of strategic allies of Russia and China as having provided really just rhetorical support so far, no major substantive support to Iran. We know that when it comes to the Strategic Cooperation Treaty signed between Iran and Russia earlier this year, it was made very clear there were no mutual defence obligations there either. So this conversation will be one to watch. This as we continue to brace for Iran's response. We have heard that update from the IDF that they've identified missiles launched from Iran towards Israel just in the last few minutes or so. And Tehran has warned that all options are open after the US attacks. But given the more muted response from these allies like Russia and China, let's take a look at the economic and geopolitical impact now. Joining us now is Bloomberg's chief economist, Tom Orlick. Our China correspondent, Min Min Lo, is also with us from Hong Kong. And Min Min, you know, it'll be interesting to watch the discussion between Russia and Iran, because certainly when it comes to Beijing's response, they've really wanted to kind of play peacemaker. The support that they've given has been largely rhetorical, as we've mentioned. What is the balancing act that China is trying to strike right now?
Yeah, China is carefully positioning itself as the neutral party here, and it definitely doesn't want to risk going into proxy war with the United States, knowing that Israel has the Trump administration behind it. And China is also trying to avoid getting entangled in any secondary sanctions if it were to provide any material support to Tehran. And that's why it's been very careful. It's provided just diplomatic support, calling for all sides to as soon as possible to cease fire, and especially calling on Israel to stop the attacks, also condemning the U.S. attack as well. There was a Global Times editorial really criticizing the U.S. for escalating tensions even further by wading into the conflict and using these bunker buster bombs to achieve what Israel cannot. So essentially using higher level weapons to escalate tensions even further instead of cooling down the conflict. So China has condemned that, but beyond that, it's not really providing any significant support aside from rhetorical support, as you said.
Tom, let's bring you in. I mean, there's been all this talk about Beijing being displeased if the Strait of Hormuz were to be cut off. But what are you seeing in terms of the demand backdrop for oil in China?
So that's a really interesting question, Avril, and I think a key question, not just for China, but for the world as a whole, is what is Tehran's next move, and what does that mean for global oil supply? Now, in an extreme scenario, if Iran decides to strike back hard, potentially closing the Strait of Hormuz, that's when we could see oil prices rising towards $130 a barrel. And that would really be a game changer for the global economy, significantly pushing inflation higher and dragging growth lower. For China, already struggling with a trade war with the United States, real estate stress, certainly those higher oil prices will be very unwelcome. The big question, though, is that the path that Tehran plans to take? Our bet, and we've got some pretty deep experts in the geopolitics of the Middle East at Bloomberg Economics, is that probably, difficult though it will be, Tehran will be reluctant to escalate a war against Israel, and even more a war against the United States, that it just knows it can't win. With a high degree of uncertainty, our base case is that Iran attempts a calibrated and telegraphed response aimed mainly at domestic political audience, while also trying to de-escalate with the United States and Israel.
And it's really the risk intersection, right? Because lest we forget, there's also still a trade war that's really only on pause. Could the timing end up being quite catastrophic for the global economy? And how challenging does it become for major central banks as they try and price in the potential risk of higher inflation?
So it's a great question, Heidi. And as you note, there's two really significant things happening at the same time. We've got the US tariffs, which threaten to push inflation in the United States higher, and global growth lower. And now we have the risk of significantly higher oil prices, which would be an additional impulse to global inflation and an additional blow to global growth. Now, for central banks, this is the toughest place to be. They see growth going lower, so they want to cut, but they also see inflation going higher, so they want to hike. Even worse, coming hard on the heels of the post-pandemic inflation, which may have de-anchored inflation expectations, higher oil prices, if that's what we see in a sustained way, well, this time round, it would be difficult for central banks to look through that shock.
Min, even as we hear from the Chinese side on the attacks on Iran, it's also interesting how it's playing out in the Chinese public. How widely is this being discussed on social media? What are people saying?
Yeah, it's interesting to watch what people are saying about the war in China, because a lot of the commentary that we have seen on Chinese social media is talking about how Iran has set an example for the world. In fact, that's the hashtag that is the #1 trending topic on Chinese social media right now. And the common thread throughout all these comments is that Iran has shown itself to be quite naive to believe the US, which is a very untrustworthy party. And it just shows you the lesson that you can take away from this is that appeasement tactics does not work, and only by fighting resolutely can you ensure your sovereignty. That's the lesson that many Chinese people are taking away from this. But that said, though, China does have a principle of non-interference, which means it is very unlikely to get entangled in this war that is very far away from its home country unless its direct sovereignty is being threatened.
Tom, when you take a look at the sort of idiosyncratic risks that are already in place, even without this layer of geopolitical uncertainty and the possible of, a widening Middle East conflict situation, how well is an economy like China doing in terms of returning to, sustained levels of growth or at least economic stability that might be able to carry through some of that growth momentum for the rest of the world, as we've become so accustomed of expecting from China?
So I think this is a tough moment for China's economy, Haidi. You've got some structural factors, demographics, a shrinking working age population weighing on growth. You've got significant overcapacity, a significant burden of debt weighing on growth. And then you layer on the Trump tariff shocks and now the possibility of sharply higher oil prices. Well, it's a lot to take on. China's policymakers towards the end of 2024 already signaled a shift in policy towards doing significantly more to support growth. We saw that reinforced by Li Qiang at this year's National People's Congress, with a commitment to significantly boost consumption and some additional fiscal firepower behind it. In the days and weeks ahead, well, we'll see how the trade war and the Middle East conflict plays out, but it very well may be that China's leaders need to start using that additional stimulus just to stabilize the economy's growth momentum.
Even as we watch for how China potentially might help offset what we're seeing globally, it's really about the growth inflation dynamic. We're hearing these warnings again come back to the fore about stagflation. Tom, I wonder, what is your assessment of how these more recent warnings differ from what we've been seeing in past few years?
So I think we need to sort of disentangle the short-term shocks from the long-term pressure when it comes to China's inflation dynamics. If we think about what's happening right now, what we're talking about today, the US bombing of those Iranian nuclear sites and all that could potentially mean for oil prices, well, that's an inflationary impulse for the United States, for China, for the world. The longer-term trend, though, for China is certainly one of disinflationary pressure, maybe even something similar to the Japanese experience of deflation, a consequence of all of that overinvestment, all of that overcapacity, now needing to find a market and the downward pressure that exerts on prices. So I think if we see higher oil prices, that will certainly be a concern for the PBOC. Their bigger long-term challenge, though, will be staving off that deflationary risk.
Tom, thank you so much for sharing your analysis with us. Tom Orlik from Bloomberg Economics and our China correspondent, Min Min Lo. And subscribers can also turn to the terminal for more on this. T-Live Go is your function for the latest updates, plus commentary and analysis from our expert editors. More ahead on the Asia trade. This is Bloomberg. Take a look at how gold is faring as well. We saw it jumping earlier, pairing those gains now, perhaps speaking to the world watching out for Iran's response amid all this. This is Bloomberg. The U.S. has said Saturday's strikes obliterated Iran's nuclear capabilities, but were not about toppling its rulers. Still, President Trump has been musing on just that topic in a social media post, asking why there wouldn't now be regime change. That's even as his senior officials reiterate that the focus of the U.S. action is solely on Iran's nuclear program.
What we are focused on is not the changing of the regime. Okay, that's up to the Iranian people if they want to do that, but that's not what we're focused on. Our national interest is about one thing, and that is Iran not getting anywhere near the capability to weaponize and have nuclear weapons. They're not going to get anywhere near that capability. The president has made that clear from day one.
Joining us now is Douglas Silliman, a former U.S. ambassador to Iraq and Kuwait. He's now the president and CEO at the Arab Gulf States Institute. It's really good to have you with us. First off, I'd just like your thoughts. I mean, we're hearing these mixed signals from both Trump and his top team about whether the goal is regime change. What is your assessment?
The answer is I don't think even President Trump knows what the actual goal is. This was a problem in the first Trump administration where some in the administration wanted to work toward regime change and others thought that pressure on Iran would be more productive simply to try to change Iranian behavior that the Trump administration in the first term did not like. There is still the same division inside the Republican Party and inside the White House now that there was during the Trump's first term. I tend to believe that Donald Trump himself is not seeking regime change. He is seeking, as he said very clearly in his statement from the White House on the night of the attack yesterday, that he wants to make sure that Iran does not have the capability to get a nuclear weapon. But there is a lot of conversation within the Republican Party about whether there should have been an attack at all on one side, and on the other side that since we've done this, maybe there's something we can do to push the Iranian people to rise up or to change the regime. So I think there is real uncertainty, and as I said, I think in the White House and even perhaps in the president's mind, he's not sure what the goal of his Iran policy is aimed at.
Where do you think we go from here then on the military campaign by the U.S.?
What I found today, I've been a little bit surprised that both the rhetoric coming from the Trump administration and coming from the Iranian regime have been relatively mild. I mean, the president said last night after the attack that this was the attack, it was over. The goal was to eliminate the possibility of nuclear enrichment and that the U.S. had obliterated the targets. That there was now an invitation to come to peace talks between the United States and Iran. I think ultimately that is the goal that President Trump probably would like to have. On the Iranian side, they today seem to have been focused much more on the political manifestations of reaction to the U.S. strikes. You saw that the foreign minister said that Iran would reserve the right to self-defense, and that he would be going off to Moscow to consult with the Russian government. Interestingly, also, that the Iranian parliament recommended that the government consider closing the Strait of Hormuz, but doesn't really have the authority to do that. So it was messaging possibly to the oil markets to put pressure on other countries, that there might be some economic pressure that Iran could put on the rest of the world as it enters this phase. there have not yet been, as far as I have heard, any Iranian military attacks on any American officials, any American facilities in the region or anywhere in the world. And at the moment, everyone seems to be trying to calm down and rationally move forward. I don't think either Iran or the White House at this point want a wider war. I will say that the wild card in all of this is going to be Israel, which has continued attacks on Iran, as Iran has continued attacks on Israel. So I think that what Iran and Israel do with each other could have a big implication for what the next steps of the United States will be.
The talks with Russia will be interesting, right, because we've seen and we've been speaking about really so far just the kind of rhetorical level support that we've received from Beijing and Moscow towards Tehran. How alone is Iran at this point? Do we write off the potential possibility of recovery for most, if not all, of its proxies?
Well, I think what you should realize, first of all, is that the number one goal of the regime in Tehran right now is regime survival. So they are not going to do anything that's going to increase the possibility of the current leadership being thrown out by a foreign invasion or foreign military action or by some sort of internal dissent. I would note that there isn't really a lot of internal dissent right now in Iran. The protests that we saw a couple of years ago about Mahsa Amini and the women's use of headscarves and the freedom of women has really quieted down. And there is no ethnic group, Baluch or Arab or Azeri, that seem to be engaged in any sort of insurgency or independence movement. And there is no generally agreed upon movement inside Iran that would seek the fall of the regime. In fact, I think that American and Israeli attacks on Iran may have the impact in the short term of unifying the population in a patriotic way behind the current government. So I think right now the Iranian regime is probably safe. What I don't really know is whether or not they are going to determine that because the United States and Israel have now taken such extreme steps to damage or destroy their ability to produce enriched uranium and possibly have a nuclear weapon, will this encourage the regime to actually rush toward the construction of a nuclear weapon, thinking that that is the only real deterrent that Iran might have? And in answer to your question, Iran is strategically weaker now than it has been in a very long time. It has lost its number one proxy, Hezbollah, in Lebanon. It has certainly doesn't have the same degree of influence over Hamas, which is really locked in a battle with Iran. And the proxies that it has in Iraq are themselves divided. The one effective proxy is probably the Houthis in Yemen, and the Houthis will be people to watch in the coming days. If Iran wants to put pressure on the United States or the international community, places other than the Persian Gulf could be the Bab el-Mandeb Strait, where the Houthis have, up to this point, targeted traffic going to Israel and American and other Western shipping. So I think that Iran's control and influence on its proxies is significantly weakened. But some of them, particularly the Houthis, may find that they have things that they can do to help the Iranians that will also help them politically at home in Yemen.
That does also make me wonder if that sort of vulnerability or even desperation perhaps gives rise to more of a hardline view. But before we let you go, I did want to get back to the point where you said, you know, so much of this depends on what Israel does next, right? And no doubt Netanyahu has taken a much more aggressive posture since October 7th regionally. Is that helpful strategically, do you think? And how much influence does Washington, does President Trump really have at this point in terms of how this has played out?
I think one of the things that will affect the way that Israel continues to see this is going to be the damage assessment, the bomb damage assessment of the U.S. strikes, particularly on Fordo, but also on Isfahan, and whether or not the United States or Israel or the IAEA is confident that it knows where the about 400 kilograms of 60% enriched uranium actually lie inside Iran. Some fear, as I mentioned just a minute ago, that Iran has broken up that enriched uranium and dispersed it in different places in the country so that it can later be brought together for the purpose of constructing a nuclear weapon or just simply preserving the work that has already gone into enriching it to 60%. I think if it is clear that the Fordow enrichment facility is significantly damaged or beyond repair, and if it is clear where that 400 kilograms of enriched uranium has gone, it could reduce Israel's need to continue attacks. I also think that Prime Minister Benjamin Netanyahu has a real stake in getting a military victory over Iran for his own political future in Israeli politics. So to the extent that he can continue to be an ally of Donald Trump in the United States in trying to prevent an Iranian nuclear weapon, he will do better in Israel. If that seems to be falling away, he might escalate what Israel does with regard to Iran and again take more military steps to try to make sure that there is no further enrichment and that the Iranians do not get to what the Israelis consider is an existential danger of a nuclear weapon.
Douglas Silliman, former U.S. ambassador to Iraq and Kuwait and the president and CEO at the Arab Gulf States Institute. Really great to have you with us and those insights. Take a look at how futures in Europe are opening, and quite a different picture than how we ended the session on Friday, where we saw European equities really gaining and quite a bit of optimism in terms of where they're headed towards the end of the year. Strategists really seeing Europe extending those gains by the end of the year, despite, of course, the slowing down of that rally due to tariffs and, of course, these ongoing geopolitical pressures. We're seeing quite a bit of downside, including for the euro, as the strengthening of the US dollar continues with that flight to havens and safety. More ahead on the Asia trade. This is Bloomberg. Israeli Prime Minister Benjamin Netanyahu says a US airstrike on the best defended Iranian nuclear facility delivered, quote, a great deal of damage, but the full extent is not yet known. Let's get more on these implications of these strikes. Joining us now is Doreen Horschig, who's a fellow for Project on Nuclear Issues at the Centre for Strategic and International Studies. Doreen, really great to have you with us, and I really hope that you can shed some light on this, given that even satellite images have not definitively been able to tell us what the damage has been, how much of it has been damaged, whether, as we know, the movement of some of these stockpiles has managed to preserve some of the enriched uranium for Iran. What can you tell us from the data and the evidence that you can see?
Yeah, thanks so much for having me. So you're exactly right in that we don't know all of the damage assessment yet. And we actually might not know that for several weeks to come because we don't have the International Atomic Energy Agency in Iran. So if they can't go in, it's going to be hard to actually have someone independent to assess the damage done. And you correctly said Netanyahu and Trump claimed that there's complete and total destruction, but we do still need to have that confirmed. And the Pentagon released a statement saying that there was some damage, and that has been confirmed by third parties and satellite imagery. So there's definitely damage, but we just don't know yet how deep Fordow was penetrated and whether the facility was completely destroyed. And then, yeah, we actually don't know exactly where the 20% and the 60% enrichment, highly enriched uranium stockpile is. Iran might have actually moved that a while ago. We don't know that. And we also are not sure if Israel knew or if the US knew where that material was. And then on Fordow, Iran also had about a week now since Israel first striked to move materials out of that facility. And there's been reports on quite a bit of truck movement there. So we're not sure if enriched material got moved from Fordow or if even centrifuge parts were moved. So there's a lot of unknowns here.
A lot of unknowns, and one of the scenarios that has been posited, including from our previous guests, saying that this could, first of all, it could convince the leadership in Iran that they need more than ever to hasten progress towards nuclear capability and that they could be rushing to get to that point. Do you think technically, personnel-wise, that's a possibility?
Yeah, so that was one of the big risks with strikes and preventive counterproliferation in the first place, that Iran then would be more determined than ever to proliferate, and that Iranian knowledge is there that cannot be destroyed. I think these strikes and other counterproliferation methods like sabotage and cyber attacks and assassinations can damage the capabilities of the Iranian nuclear program, but it's really difficult to interfere with the intentions. So Iran might be, more determined to proliferate, and it's going to be hard to strike that knowledge, right? And that knowledge base that is just there around uranium enrichment and the reactor technology and the fuel cycle that's sort of necessary for sustaining nuclear fission.
Doreen, could you also share with us a bit more about how effective past instances of counter-proliferation strikes have actually been in the Middle East?
Yeah, so Israel has quite the record of using counter-proliferation methods. It successfully destroyed the Iraqi Osirak reactor in 1981 and then the Syrian reactor in 2017. But they are very different counter-proliferation cases because it was a single reactor in each case that Israel attacked. It was still more than just using an airstrike. There was a lot of intelligence work done before that. But overall, the programs were in a much earlier stage. So the strikes were very surgical and the programs were halted in the long term. Not necessarily Iraqi determination to proliferate, but it definitely had some success. And now the Iranian program is very different in that the sites were very dispersed. And so the whole counterproliferation operation was a lot bigger. And it's very difficult to compare here on how successful this is compared to Iraq and Syria. But Israeli methods against Iran beforehand, like assassinations, because we know that wasn't the first time last week that Iranian scientists were assassinated, and also the sabotage against the Natanz facility a few years ago, and the cyber attack Stuxnet that was conducted with collaboration from the US, were halting the Iranian program in the short term, but it didn't really do a whole lot in the long term. And we've seen Iran taking steps towards advancing its nuclear program. So there's quite a bit of debate on how successful Israeli counterproliferation is. And it really depends on how you measure success. Is success the complete elimination of a program, or is it halting it and buying more time?
Doreen, as part of Iran's response, we're hearing speculation about how it might withdraw from the nuclear treaty. What might this mean for the international nuclear regime?
Yeah, so this would be not great news. It would really hurt the norm against nuclear proliferation, and the international community would kind of have to wrestle with that question. Critics will also say that may create a proliferation cascade in the region. We know Saudi Arabia a few years ago has said that they would be getting a nuclear weapon if Iran got one. And some even say it might have a global effect, that we see more nuclear proliferation. But coming kind of back to the effect on the NPT, the Non-Proliferation Treaty, which is our bedrock of the non-proliferation effort, we're not sure yet. And I wouldn't be too quick to say that the regime will break down, because we saw with North Korea withdrawing from the treaty that might not be the case. There's still about 190 countries who are signatories to the treaty, and we have non-proliferation, we have nuclear weapons-free zones, and a lot of members there who are very adamant about promoting non-proliferation, and there's a real low risk in some of these regions that actors get interested. So I think we will definitely have to wrestle with this question of how does it affect the norm against nuclear proliferation, but we also should be careful to say that that the non-proliferation regime will completely break down. So we really have to see what Iran will do here.
Doreen, really good to get your insights on this. Thank you so much, Doreen Horschig, Fellow for Project on Nuclear Issues at the Center for Strategic and International Studies. Meantime, IMF Managing Director Kristalina Georgieva says the impact of the Middle East escalation on energy supplies and prices is a key concern. She told us more about the rising geopolitical risks facing the global economy.
We are looking at this as another source of uncertainty in what has been a highly uncertain environment. And we are watching for two things. One, how would that impact risk premia for oil and gas? There has been some movement upward. How far would it go? And two, would there be any disruption in energy supplies? For now, no. But let's see how events would develop, whether either the delivery routes or spillovers to other countries may occur. I pray no.
Right. Is the transmission mechanism the channels where you're seeing the biggest Middle East shock in energy prices at the moment?
It is in energy prices, yes. Of course, there could be secondary and tertiary impact. Let's say there is more turbulence that goes into hitting growth prospects of large economies, and then you have a trigger impact in a downward revision of prospects for global growth. As you know, we have already revised the downward growth projections for this year, and we will be coming up with our next projections in July. So far, what we see in the first 2 quarters of the year broadly confirms the picture we have painted in April, and it is somewhat slower global growth, but no recession. It is a very different world today than what we had right after COVID. Right after COVID, we had central banks going in a lockstep. Monetary policy opened up more space for injecting liquidity in the economy. So monetary policy, fiscal policy, all over the world, pretty much doing the same thing. Now we are in a very different place when monetary policy around the world has to go in different directions. We have in some countries monetary policy some tightening. We see some countries actually losing, getting a bit more space through monetary policy. And why is this difficult? It is much easier if you can sit in your chair as a governor of a central bank, look around and say, everybody is cutting, I'm cutting as well. Or everybody is tightening, I'm going to tighten as well. Now we are in a place where everybody has to judge on data for their own conditions.
IMF Managing Director Kristalina Georgieva there speaking with Shery a little bit earlier in Tokyo. More ahead on the Asia trade, this is Bloomberg. Take a look at how it's shaping up when it comes to the picture for US futures, as well as Greater China futures and Taiwan futures as we head into the start of trading in about half an hour or so. Largely fairly comparatively muted, I should say. Some downside, of course, that we're seeing there at the moment, but really awaiting for further developments when it comes to Iran's response. What happens with the Strait of Hormuz? This is Bloomberg.